Silver has broken above $91, with Western spot currently trading at $90 and futures also at $90 as markets approach March settlement now just 48 hours away. The move higher comes as registered silver on the Comex stands at 87.2 million ounces, following the largest single-day roll observed to date, with 71 million ounces rolled the prior session. Expectations of a March force majeure, which had been a widely discussed topic in recent weeks, are now described as off the table following the completion of that roll. Shanghai spot silver is trading at $100, with Shanghai futures at $104, maintaining a $10 premium over Western spot prices. Gold is currently at $5,185. The gold-silver ratio has broken back below its 50-day moving average, with the ratio currently sitting at 57. Silver touched $91.14 during the session, a level above the 50-day moving average, which sits at $81. The 50-day moving average has not declined since May 30th, a technical condition the source material identifies as consistent with sustained uptrend behavior rather than a corrective bounce. Prior resistance in the zone between $87.20 and $89 has been broken with an hourly close above that level, with price running to $91 before pulling back to $90. The next identified objective is $92, with the former resistance zone now acting as support. These price developments are unfolding against a backdrop of several converging data points. Total open interest entering settlement in 48 hours stands at 115 million ounces against 87 million ounces of registered silver available, a $10 Shanghai premium that has widened rather than compressed, 25 Shanghai Futures Exchange Trading Group suspensions recorded in February for position limit violations, and escalating security disruptions affecting Mexico, the world's largest silver producer. Each of these developments will be examined in full detail in the sections that follow. Turning to the physical inventory data, registered silver on the Comex now stands at 87.2 million ounces, following the removal of another 1 million ounces from registered stocks on Tuesday. 71 million ounces were rolled the prior session, in the largest single-day roll observed to date, and while that roll relieved immediate March delivery pressure, the source material notes the complete absence of new metal flowing into Comex vaults to replenish what is leaving. Total open interest entering settlement in 48 hours stands at 115 million ounces against 87 million ounces of registered silver available. The source material highlights that physical silver ownership within Comex vaults is not necessarily evenly distributed, making it incorrect to assume that if March open interest falls below registered silver stock, all silver short positions are safe through May. Uneven distribution means some short positions could still face delivery pressure, even if aggregate numbers appear manageable at the surface level. The source material identifies the declining registered silver figure as the key metric to track for assessing whether silver will trade higher later in 2026, with the driver being demand proving larger than supply. The sequence described as typically unfolding begins with the March-May spread, or later the May-July spread flipping from contango to backwardation. When that occurs, Comex outflows are expected to accelerate. Retail investors are then described as recognizing the move higher as not a one-off spike and beginning to purchase ETFs, which removes additional physical silver from the market. The price moved higher rather than lower during the 71 million ounce roll, which the source material identifies as indicating that demand for physical silver at current levels remains strong rather than weak. On the Eastern market side, Shanghai silver closed at $100, with Shanghai futures closing at $104, maintaining a $10 premium over Western spot silver at $90. That $10 gap between physical demand in Asia and paper pricing in the West has not closed. It has widened. Gold closed at $5,211.34. Palladium closed up 4.5%. Platinum closed up 7.03%. Shanghai Futures Exchange silver inventory recorded an increase of 5.95 tons. The source material characterizes the persistent and widening Shanghai premium as signaling structural dislocation rather than temporary arbitrage. Regarding the Shanghai Futures Exchange enforcement actions, the exchange suspended additional trading groups for breaching Article 16, bringing the February total to 25 groups suspended. The official reason cited was that accounts exceeded daily opening limits and violated exchange trading rules. The source material notes that 25 suspensions in a single month is abnormal, and that exchanges act when risk rises, with the suspension activity occurring immediately following visible heavy price pressure on Shanghai Futures Exchange silver. The source material identifies the Shanghai Futures Exchange as one of the major physical link silver markets globally, stating that stress building there affects global flows rather than remaining isolated as paper market noise. Exchange enforcement of position limits aggressively is identified as typically signaling volatility, risk position concentration, liquidity imbalance, or potential delivery stress. Turning to the situation in Mexico, the world's largest silver producer is reported to be facing serious and escalating disruptions. Silver has, for the first time in history, been declared a critical mineral, with documented roles in both artificial intelligence and defense applications. 50% of United States silver imports originate from Mexico, and the United States has modeled scenarios in which supply disruptions from Mexico could impact gross domestic product, raising national security concerns in the process. Recent developments on the ground in Mexico are being cited as significant. Several days prior to this report, 10 workers from a mining company were abducted, with 3 subsequently found dead. The source material states this incident has made it harder for mining companies to attract employees and has driven security costs higher. Cartel-related violence had already been escalating prior to this specific incident. Transportation of silver is now facing disruptions and costs continue to rise. The source material characterizes the situation as one where risks are clearly increasing, while stopping short of describing it as a definitive worst-case scenario. The source material also addresses the potential stabilization of the Mexico situation. The Trump administration's coordination with the Mexican government is described as potentially working toward restoring federal authority over northern regions of Mexico that have been dominated by cartel activity. The source material states that Mexico's raw materials and silver supply make it in the Trump administration's direct interest to ensure stable conditions in the country as quickly as possible, and that this can only be achieved in cooperation with Mexican authorities. Signs of the situation beginning to calm are noted, with the assessment offered that when cartels begin targeting assets of the upper economic class, including the mining sector, enforcement responses by force become more likely. All of these supply-side developments are occurring in a market that has been in deficit for 5 consecutive years, with Comex inventories described as steadily draining throughout that period. The source material frames the combination of persistent structural deficit, draining inventories, and growing supply disruption from the world's largest producer as converging pressures rather than isolated events. On the psychological dimension of the current market structure, the source material references the framework of System 1 and System 2 thinking, as documented by Daniel Kahneman in Thinking Fast and Slow. System 1 thinking is described as fast, intuitive, and emotional, the default response during periods of market stress. System 2 thinking is described as slower, deliberate, and logical. The source material states that the combination of 48 hours to settlement, a $10 Shanghai premium, 25 Shanghai futures exchange account suspensions, and Mexico supply disruption is creating System 1 panic responses among short position holders. When that panic expresses itself as enforced covering rather than rational position management, the source material identifies this as the mechanism that creates discontinuous price moves, a dynamic that volatility indices are described as currently pricing. The source material additionally references Gustave Le Bon's work on collective psychology in markets, specifically the observation that collective psychology shifts suddenly when a crowd realizes it is positioned incorrectly, with individual rationality giving way to herd behavior. The 25 account suspensions in 1 month at the Shanghai Futures Exchange are cited as confirmation that crowd positioning was extreme enough to trigger exchange intervention, and that when an exchange steps in to manage the risk of concentrated positions, it confirms the structural setup as real rather than speculative. The source material also presents the counter-arguments to the current setup. The 71 million ounce roll completed the prior session represents successful roll mechanics functioning as intended. The force majeure scenario discussed in prior weeks did not materialize. March settlement may complete without a major incident if remaining positions continue rolling or accept cash settlement voluntarily. The Shanghai premium could narrow if Chinese demand moderates or Western supply increases. The Mexico security situation could stabilize quickly with government coordination. These factors are presented as genuine possibilities, rather than dismissals of the structural data outlined throughout this report. Bringing together the full scope of developments covered in this report, silver broke above $91 with Western spot at $90 and futures also at $90, 48 hours before March settlement. Registered silver on Comex stands at 87.2 million ounces, following the largest single-day roll observed to date at 71 million ounces. Expectations of a March force majeure are described as off the table following the completion of that roll, though the source material characterizes the delivery pressure as deferred rather than resolved. Total open interest entering settlement stands at 115 million ounces against 87 million ounces of registered silver available, with uneven vault distribution, meaning aggregate figures do not eliminate delivery pressure risk for all short positions. Shanghai spot silver is at $100, with futures at $104, maintaining a $10 premium over Western spot that has widened rather than compressed. Gold closed at $5,211.34. Palladium closed up 4.5%, and platinum closed up 7.03%. The gold-silver ratio has broken back below its 50-day moving average at 57. Silver touched $91.14, above the 50-day moving average at $81, with the 50-day moving average not having declined since May 30th. The next identified technical objective is $92, with former resistance now acting as support. The Shanghai Futures Exchange suspended a total of 25 trading groups in February for position limit violations, with the official reasons citing accounts exceeding daily opening limits and violating exchange trading rules. Mexico, the world's largest silver producer accounting for 50% of United States silver imports, is facing escalating security disruptions, including a recent incident in which 10 mining workers were abducted and 3 found dead, driving up security and transport costs and making worker recruitment more difficult. Silver has been declared a critical mineral for the first time in history, with roles in artificial intelligence and defense applications documented. The market has been in deficit for 5 consecutive years, with Comex inventories steadily draining. All data points, inventory figures, Eastern premium levels, enforcement actions, technical levels, and supply disruption details referenced throughout this report are drawn directly from the source material and are recommended for independent verification through primary sources including CME Vault reports, Shanghai Futures Exchange enforcement notices, and Shanghai premium data. That concludes this broadcast report on current silver market developments as March settlement approaches within 48 hours.